Welcome to all of you joining us from LinkedIn and YouTube. Remember that this session will be available on demand on your LinkedIn page as soon as the session is over. We're hoping for a very interactive session. And as always, your thoughts, your questions, and your remarks will be more than welcome. I'm very happy to welcome Mike Massaro from Boston and Flywire. I will very shortly introduce myself, and then, of course, we'll ask Mike to present himself and go over the crazy journey of growth that he experienced with Flywire. I am Mathieu Carenzo. I've been teaching for the last 15 years in IESE entrepreneurship and financing entrepreneurship. 15 years means 5 years more than Flywire. That did not get yet to 10 years old. And apart from teaching, I am investing in startups also for the last more than 10 years. And I've been lucky enough to be in a position to invest twice in what became a unicorn later. Once I did not invest, and once I invested. And I would have a full deal flow of 10 years. I would have 30 investments. Just one became a unicorn. So I think the learning we can get from Mike and how he was able to build a company from Boston and Valencia a little bit more than 9 years ago to a unicorn is going to be very interesting. So basically, Mike, apart from introducing yourself, could you go over the most important milestones that you've been facing and the learning you had during that journey of growth, of hypergrowth, I'd say?
Sure. Matthew, thanks for having me. Appreciate the time today, and glad to be here with everybody. So my own background, first of all, about 20 years in tech, third startup for me, first one I've run. Been part, fortunately, of 2 other companies that had successful exits. And I would say the journey we've had here on just about 10 years, as you mentioned, has been a crazy one. If anybody tours our Valencia office, you actually would see a mural on the wall that's this windy road of a journey that we oftentimes share with our employees or our flymates around the world. And we really do focus that journey because, that inside that journey has a lot of different experiences that helped make the company who it is today. And I think what you oftentimes see is you often see companies talk about all the good times, and they don't necessarily focus on the challenges that were part of that journey along the way. And so, if you look at how we started, right, we really did start out with our founder, Iker Marcade from Valencia, who was going to MIT Sloan for his MBA. And, he had trouble with the use case of paying tuition. Fundamentally, he surrounded himself with a great, supporting and founding team that had experience in billing and payments. And that's how we built the company. It was really off of a simple concept, a simple idea. And along that journey, we were fortunate to find the right type of investors, to have quite a bit of luck, a lot of hard work, blood, sweat, tears that got us to the point where we are today. And even today, we just feel like we're probably in the beginning parts. We're probably in maybe chapter 2 or chapter 3 of a 10 or 20 chapter book.
Thank you very much, Mike. When you look back a little bit of that growth path, what do you recall? You recall something like a marathon, which is basically continuous running at the same pace, or is that more of a mountain stage in the Tour de France?
Yeah, there's I actually brought with me a couple of slides that to me highlight some of the challenges you see on high growth. The first is what one I'm showing now, which is a bit more. What is this constant feeling like when you're going through growth and hypergrowth, you're constantly feeling like you're breaking, right? And as you look at the scale of the number of, for us, employees, flymates, you constantly have this feeling of something's broken. It wasn't broken yesterday, but today it's broken, right? And as I was learning to become a CEO, the thing I started to try and do at the beginning was stop the company from breaking. And I realized very quickly that was just not possible, right? The company was going to break. The inertia was around breaking, right? All I could do and all the team could do is to identify what breaking was as soon as it happened, or it looked like it was about to happen, and then try and address it and change and adapt the business. Sometimes that was process change. Sometimes that was organizational change. And you kind of would always go back and forth between this moment of everything feeling broken and almost being overwhelmed to this brief moment of like management perfection, but it was this fleeting moment. And so, this is the best example I had seen. A fellow CEO, Lewis from Earnest had done an original version of this slide, and I saw it and kind of expanded on it. And then the second one I'd like to just share is one that probably is a little more kind of off the, less formal maybe, but this is often what it feels like, right? When you're inside a high growth startup, you get to the point, you almost set a finish line for yourself of a certain milestone. And if you're fortunate enough to hit that milestone, you quickly realize, wait, there's another milestone, right? Like the race continues to get harder. And what I thought was the mountain was just a hill. And you've got to kind of go on that next part of the journey. And not only did of course I feel this as the CEO, but I really think this is what the team goes through, right? Is this, how did we get here? I can't believe we accomplished what we did. And the fact that the journey ahead is a very vertical climb up still. And I still feel this today. And obviously, the little stick man here uses some creative language to explain his frustration. So.
It's very interesting what you say, because there is this misunderstanding sometimes when it comes to high growth, where you believe that because you have a round, because you have an investor and you have a bigger investor and the one that is known, then the risk is going down. But the expectation of growth that brings strong investors is so high that it's not because you just closed the round that the risk got down. I mean, the statistics are still the same. So the challenge is just bigger at any stage. So that's
exactly right. And what I would also say is the expectations are higher. You also look, whenever I see people congratulated for fundraising, a CEO that just raised a Series A here in the U.S. I saw a couple of posts on LinkedIn. And he said, hey, this is the start of the journey. This isn't the end, right? And it couldn't be more true, right? Oftentimes we see fundraising as it is a great milestone, of course, but and oftentimes a lot of hard work went into getting to that point. But it is the start of the expectations, right? And it's oftentimes the raising of higher expectations. And so, it is not the end of the journey; it is the beginning.
Yeah, excellent. That brings me to another question. Before I open to the audience, which is related to how you have to change as a CEO and how you need to become a different kind of leader from managing a team where maybe you know everybody by name and last name, and maybe you even know their family, their kids, and you have like 2 or 3 people in the board that are people that are close to you, that are early stage VCs and BAs, and then you grow, and the kind of leadership that you need to transition to is a different style. And as an investor, I'm always scared when that time comes in, because you never know if the CEO will be able, to do that transition. So what are your thoughts about that thought, and also your experience, because you've been there as a CEO for the last 7 years, so you've been seeing that every day.
Yeah. So, as you mentioned, became the CEO at about, maybe 35, 45 employees, somewhere around there, less than $1 million of revenue, many years ago. Little unknown fact, I actually said no, I think twice, to the CEO role first. Wasn't sure, and I'm actually not my chairman either. I'm actually one of our external board members became our chairman, who was on the board with myself and Iker back in when I made the transition. So one of the things I would say, I joked I didn't want 2 jobs I didn't know how to do back in the day, right? So I gave the chairmanship to someone who had that experience. And for me, as I became a CEO, the first part I felt was important is I knew about half the company at that point, right? Because of having 2 offices in Boston and Valencia, I hadn't had a lot of the external facing parts of the team. I didn't have a lot of the product and engineering side in the operational side of the business. And so one of the first things I did is I had 4 children under age 7 at the time. We took them out of school. My wife was agreeable enough to pick up and go for about 3 or 4 months to Valencia and just spend time with the team. We were, building relationships, having people get to know, me who didn't have that experience, because I'd spent most of my time in the United States for my prior role at the company. So that was the first part, right? Those personal relationships, people need to know that, know who their leaders are. I would also say, we went through some very hard times between our Series A round and our Series B round. We got to the point where we even considered selling the business. Weren't sure we were going to be able to get to scale. And so that caused us to have a very open and transparent dialogue with our flymates, right? And to be really clear as to what was happening. And so when I became CEO, in some ways, that level of transparency was just what I had. Right. And so for me, that was a huge blessing. Right. I've worked for others. I've heard stories of CEOs who, they say they're open to all questions. They say any question's a good question. And then you ask how many shares are outstanding on the cap table, how much cash is on the balance sheet, what's our biggest competitive threat. And they don't like the transparency when the hard questions come out, right? So for me, I was forced early on, and I think it's part of my nature to just be very open and direct with people because of the experience we had in the business. And so I think that's what I was fortunate to get in the early part of my CEO. There was not much posturing, right? We knew we didn't have at the time we didn't have an amazing business. We had a business that may succeed if we worked hard for the next X number of years and executed well. And so, there wasn't a lot of time for lofty feelings, to be, enamored by the title. It was a lot of hands-on work. And so, as you said, I went from, a CEO by title, but frankly, doing a lot, I redlined 500 contracts, right? With help from outside counsel myself, right? I was the one who signed the contract physically. I redlined it oftentimes, talked to the lawyers on the other side of clients. So it was a very hands-on role for those first 2 or 3 years. And then as we went through scale, again, I was very supportive to have a great group of investors, an external chairman, and a peer group of CEOs in and around pretty much all of tech through my investor set. And I could start to see scaling CEOs that were ahead of me by 1 or 2 years in the journey. And I think as you look in any role, right, whether it's a CEO role or starting your own company, your peer group is really, really important. Oftentimes people will get stuck in a peer group, and then their experiences are different than their peer group. And I was fortunate to have people who would keep telling me along the way, make sure you expand your peer group, make sure, it's not people who are in the journey, or were in the last chapter of your journey. It's the people who are in the next chapter of your journey that you can learn from. And so that advice was very, very powerful. The couple other learnings I have a user manual. I made my whole executive team do user manuals, just like a tech user manual, but it's for who you are, what makes you up, how you like to work. So that's an important aspect that we hold true. And then a lot of 360 feedback, right? People know exactly where I shouldn't be spending my time or where I need to spend my time inside the company. And if you have a good 360 feedback process or feedback loop inside your company, you can learn very quickly where people don't need your help and where people need your help. And I think part of the role as CEO is to kind of morph into whatever the organization needs for that part of the journey.
And as of today, the typical day of Mike, what does it look like?
Oh, if you ask my kids, it would just be standing here at a screen and talking nowadays. Prior to COVID, I probably made 10 international trips a year. I'd be off to Singapore and Australia and Valencia and London. And, I was super excited to go to Tel Aviv. I never made it because of the pandemic for a newly acquired business and office we have in Tel Aviv. So I would normally, for 20 years, I've traveled the world pretty much. And so this is the first year where that won't happen. I would say I spend a lot of my time trying to put enough process in place to make the company operate efficiently. And then I spend probably half my time removing process. So, like if you think about it, that there is this aspect of where things are inefficient and there's lack of communication, I'll try and help put in some basic process. And then I'm also always on the lookout for where has process been created that is too complex or is creating barriers between departments. And I'm trying to spend time there. So that's probably 3/4 of my role. And then, 1/4 of it is external facing, talking to investors, the next set of investor potential, bankers, strategic partners. That's where a lot of my time, things that ultimately with my role and my title, I need to do.
Great, Mike. Well, I'm going to take advantage of you opened the door of the COVID, so I'm
sure.
Lots of questions related to COVID, but I'll start with the open one, which is how did COVID affected the business? And I know you don't have a crystal ball, but how do you think? What are the changes you think are going to stay?
Yeah,
well, it's a threefold question. So what did change already? What do you think is going to stay, and what do you think is going to be removed? Let's say.
Yeah. So, we were always a very global company, right? 12 offices, 500 Flymates, 32 nationalities. So, every single Flywire office every conference room has a screen with a video conference, single press video conference setup. So it was very common to be on video constantly, when you were in a Flywire office. I would say we had a flexible schedule before where people would work, a day at home. But obviously when the pandemic hit, and we have a team of 50 or so Flymates in Asia Pacific. So our folks in Shanghai saw the pandemic, well before anyone. And so we had a bit of a heads up as to what we were likely to expect. And our transition to home was actually relatively effortless. Our transition of our clients, interesting enough, was actually much more challenging, right? We service some of the top educational institutions in the world, medical hospitals, travel companies, businesses that need help with these kind of complex payments. That's our core business. And oftentimes those teams, finance departments, accounting departments, who are our end customer, they didn't have really flexible environments to work from home. They weren't doing a lot of video conferencing, right? A lot of their infrastructure wasn't set up for remote work. And so our first focus on the business was how can we adapt our software for our clients? They had things happen like people didn't want to send out bills during, the heat of a pandemic, right? Where there was spike in hospitalizations, or they wanted to adjust their billing timeframes for the year. And those types of things were changes to our software that we had to do to enable them. So there was definitely less of we supported the Flymates. We actually had 20 people probably around the world in different locations. And so, immediately we had to go and say, where do Flymates want to be in a global pandemic? And let's do everything we can to get them there, right? Whether it's around family, back to their home country. We had people on assignments in different countries. So that was kind of the first step. Once Flymates were safe, we shifted to what can we do to help enable our customer. And so that's how we've navigated. Of course, we did the scenario planning that every business did. What type of impact would we see on our revenue and our costs associated with the pandemic? We're fortunate to have navigated the year extremely well, considering, we had an education, healthcare, and travel business. We were fortunate as well to have raised our Series E round from Goldman Sachs in February of 2020. So, timing was a bit lucky on that one. And so we had plenty of capital to keep investing in the business. Of course, reduced, certain expenditures and things that we thought would not come back quickly. So, I think, to answer the second part of your question of, what's staying, and I guess the third part, what's disappearing. I think what's staying is this aspect of flexibility, right? It's this aspect of, ironically, you have flexibility, although at the same time, your work and personal lives have been smashed together, right, inside our homes. And so I think the flexibility it's given so many of us to spend more time with family, to find more time in our day, maybe to go outside, to exercise, to do whatever we can based on the restrictions in our country. I think those things are here to stay, right? You can run businesses. I mean, some of the top executives in financial services and banks who I speak to, they were some of the biggest proponents of we can never have our, teams work from home. And they're running, these massive banks, these massive companies, completely digitally, right? And so I think everybody, even some of those folks that didn't think you could ever, quote unquote, trust people outside of an office, have realized that, you can run a lot of your business digitally. And we've learned that as well. So I think that's here to stay. I think more flexibility is here to stay. I don't think people are going to be working in offices 4 or 5 days every week. I think there's going to be more flexibility in schedules. What I hope disappears, there was a lot of travel that, even myself and our team did, that was in hindsight unnecessary travel. The trips to San Francisco for a 1-hour meeting, those types of things I think will disappear, because there is this consistency now of everyone knows how to join a Zoom or a video conference. And so I think that will really help, right? People will be more efficient with their time. It will enable more flexibility. So that's how I'd answer those 3 parts.
Excellent. That's very interesting what you say about momentum and timing, and the fact that you were. I wouldn't say lucky enough. It's just timing. But it's clear that closing a rung in Feb or early Feb versus trying to do it in April changes the whole. I'm an investor in a travel tech B2B company in Europe that is growing quite nicely, and we closed the round in January. And that gave us runway for 18 months. We would have waited 6 more weeks, and negotiating little points, and probably the run would not have taken place. So
yeah, and I think I think it's important. I mean, our biggest issue between our Series A round and our Series B round was raising at the wrong time, and I think that's something we corrected in our C round, our D round, and our E round. Whereas we raised at points when we actually didn't need the capital, and the business was strong, and we had the metrics to back up the fundraise. And I think that, that's a huge thing, right? Oftentimes as you're building a company, you think, well, I'll just wait till I hit the next milestone, or I'll, I can get a little further and get a little higher valuation if I keep waiting, right? If you raise on strength, that little, margin of valuation increase really doesn't matter, right? And the fundraising process can be very streamlined if you raise at the right time.
And quicker. That's a great learning. I have some questions from. It's very interesting because this is kind of geographically based. But there is a question from Yang Jin on YouTube from China, which is basically, and you'll tell us what's your point on that. Is I realized that Flywire was trying to expand into China market, but not really successfully in locating the right talent. You tell me if it's right or wrong. How do you address the talent and business model localization problem?
Yeah, so we've got a great team, probably about 15 or so in Shanghai. We find great talent, pretty much everywhere. I always say we actually just identify flymates who don't know they're flymates yet all around the world, right? So, I would say there is a point of expanding internationally, especially in Asia and China. So many companies talk about it, and it almost seems like it's simple. Oh, we're just going to go to Asia. We're just going to go to China, right? Yeah. Those are massive undertakings, right? And I think you have, in general, in tech companies, people think that you can just expand geographically easily. We were fortunate to I had done that at different levels throughout my career and spent a lot of time internationally. And you need the CEO, you need the executive team, you need local expertise when you're expanding to be successful, right? You can't just, assume you can manage it from the United States or manage it from Europe, right? It has to be regionally built out with a great team that can run that business without much involvement from overseas. And so I think that's the challenge. I mean, obviously China's been a dynamic place in the last 10 years to especially be related to payments. For us, it's the #1 market for education payments, our biggest corridor for payment volume. And we've also been fortunate to have a number of great partners. China UnionPay, Alipay, Alibaba have been longstanding partners of ours. So, it's unique. You have to adapt. You have to obviously follow the regulations and the rules and get people that understand those in that market. And you have to be patient, right? I think for talent for us, we're pretty picky, right? We do look for kind of great flymates who want to work in a global company, a geographically distributed company. It's not easy, right? Our teams in the US and Europe and Asia, they, spend time early in the morning, they spend time in the evening with each other. It is not a 9 to 5 type of schedule. when you're truly running a global payments company. So, I would say talent is something where, we're picky. But I would say we've got an amazing team all around the world, and, excited to probably add another 100 roles or so in the next 12 months.
Perfect. Well, let's move from China to Africa. That's a question from Lawrence. Africa seems to many the next frontier for fintech's expansion. Stripe and Visa have recently made some partnership investments with Nigerian-owned fintech businesses. Is Africa in your line of fire, or when will it be?
Yeah, so two areas for us, right? As we run a payments business, we have clients, right? Educational institutions, businesses, medical hospitals that use our solution. And then we also have a payment network, right? And that payment network is actually how the money moves around the world. And so for us, geographic expansion is always about where do we expand to get new clients geographically. And so we've already started in South Africa, for instance, when it comes to client acquisition. And then the other part is payment infrastructure and network, right? And they go hand in hand, right? We can't really satisfy the clients and the payers if we don't have the payment infrastructure to go in that region or market. And so, payment infrastructure, been investing in Africa for, I'd say the last three plus years. Again, it's an area where we look to banks, we look to partners. There's a great company called Flutterwave in that area that's done some great things. Stripe just bought a business as well that's enabling more e-commerce in that region. So I do think it's an area where you're going to see digitization. Frankly, you've seen digitization for decades with the mobile carriers and the way in which money has flown. It's just different than what you would see necessarily in Europe or the United States. And so it's really kind of connecting some of those local rails with kind of the cross-border flows that I think is the next horizon, for the continent, really.
Perfect. Question from Divya Gunlapal in YouTube. What are Flywire major strategic challenges for the next 3 to 5 years? And there is an underlying reflection, which is that the payment ecosystem is becoming very complex and clustered every day more. Is there anything between the fact that you go by verticals and the fact that it is clustered and in a way more complex? What's your...
Yeah, great question. So, I think the evolution of payments, to me, there's a digitization. In some ways, there's almost this wave of digitization that had come through point of sale, e-commerce, right, and the improvement of that. If you look at what we've done, think of it as almost like it's another part of that wave, or maybe a second or third wave. Which is there's a lot of industries that don't fit into those buckets, right? If you look at our industries I just mentioned are good examples where things have yet to be streamlined or digitized very well, right? Any parent who's made a cross-border tuition payment, it's an extremely painful process that had existed prior to Flywire. So, that's a good example where there's a lot of payment volume, a relatively complex transaction. And yet it hasn't been solved by, some of the traditional e-commerce or point of sale payment vendors, right? So I think as you look in the big trend right now in payments is a combination of software and payment functionality coming together. There's also this realization that acquiring payment technology used to be actually relatively challenging. It still is in a lot of areas. You've got to go sign up an acquirer. You may have to sign up multiple acquirers. If you want to add PayPal and Venmo, you may have to sign paper there. American Express may have different paper, right? So you have all these different payment methods, payment vendors. You have to process bank payments, maybe international bank wires, right? So that aspect of having to manage all of those relationships is actually relatively complex, right? And what we see as a trend is that more and more companies and institutions are looking to just acquire software that just takes away the payment problem, right? They expect the software to solve the payment problem, not for them to be handed a giant IT project to integrate in a bunch of different payment services, right? And I think that's part of it, right? Is you're seeing a lot of this payment as a service infrastructure. Visa bought a company called Earthport to expand away from just credit card networks into bank networks and banking infrastructure. They've announced an acquisition of Plaid. We'll see if it goes through the regulatory framework in the US, but that connects a lot of bank accounts around the world to tech companies. And so I think you're going to see this kind of streamlining of payments are going to get, acquired, if you will, through software by people who need payments. I mean, look at your consumer experience today, right? Like, prior to COVID, at least, you'd pick an Uber would pick you up, a Lyft, or you'd order food and it would just show up. The payment experience is embedded in that consumer software. So you would argue it's not even a checkout process, right? And there's so many industries that have yet to be integrated that well. And I think you have legacy payment infrastructure vendors who are massive at scale, but they're not going to dive into the individual use cases and build the end-to-end infrastructure. And so they're going to be kind of connectivity similar to how the cable companies and the internet providers have been. Everybody thought they would be a dumb pipe, 2 decades ago. And the reality is they're the most critical pipe, right? Delivering, everything we do today that runs commerce and runs, our entertainment. And so I think a similar shift is happening in payments. And I think that's why it has, the next 10 or 20 years to evolve.
It's you kind of answered the next question, but which is from Jeremy, which is, how long do you think this fintech bubble will last? And then you have 3 points, and then if there is any. So 10 to 20 years at least.
Yeah. I think it, there's, don't get me wrong, there's definitely bubbles, right? And I think this goes back to what I said earlier, which is, we focus on our journey and the ups and downs of that journey because it's important to remember the challenges, and we keep having challenges, right? We try and launch new products and they may not work like we intended them to work, or new regions. The question is, how do you then adapt and, not ignore that or pretend those learnings didn't happen? And so, again, I think that's what I think makes people overthink the bubble term, is that there's companies who have raised 20, 40, 50, $100 million that have just not been successful. And that's natural though, right? It's unfortunate people don't hear about them more often because that's 90% of tech companies, as those that invest in the space will know. But again, I think part of that's also about, these, any company, Flywire included, that's looking like it is being successful also has equally a similar amount of challenges, right? And in scaling at different levels and growing its markets. And so, I look and say the embedding of financial services in software is a trend that will continue for a decade plus. This digitization and streamlining what a client needs to know about payments. I mean, these are regulated, complex businesses. Our clients, small businesses, they're not going to understand all the rules associated to them. So they need companies that are built to enable them to do commerce without them having to be experts or have huge IT teams to implement payment capabilities. So I don't think that's really a bubble. The valuations, again, I think people are really excited about the digitization and the push around, our lives being digitized and money movement being digitized. And I think you're going to have companies that are wildly successful there and get valued very high. But it's a long-term game, right? It's, if those valuations aren't justified in 2 or 3 years, you're going to see them adjust and change.
Yeah, I always say that I love bubbles, because if that creates products, that creates companies that are making our life easier, and we kind of shrinken the, basically the middleman, I think it makes a lot of sense. Now, what's very interesting is that we have an audience which is quite as international as Flywire. So we discussed Africa, we discussed China. Now, there's questions around Latin America. What's the perspective of Latin America? Is that, in what is it different from China or Africa?
Yeah, it's our go-to-market there is very similar, right? It's client and it's network. Again, started making an investment probably, 4+ years ago around network, right? We almost have to lead with network infrastructure because, like I said, if we end up with clients and we don't have the way to deliver a great experience when it comes to collecting and getting paid, obviously we're not going to be very successful in acquiring clients in that region. So started first with network, quite successful combination of bank partnerships and, I'd say fintech enabler kind of partners. And then I would say in the last 18 months, invested pretty aggressively in a team, right? So, pretty much throughout, Peru, Brazil, Argentina, even Central America with Mexico and elsewhere, right? Adding clients at quite a great pace. I'd expect it to be a market that we see exponential growth in the next 3 to 5 years.
Right.
And again, doing so also cross industry, cross vertical, right? So again, we're fortunate because we have geographies to expand into. We have more capabilities we can bring to our existing clients. And in addition to that, we have this payment infrastructure that we can constantly add that will then also help the business grow. So we kind of have these multiple trajectories for growth within a region. And that's what helps us kind of, these investments oftentimes are returned for us within a couple of years because you have those kind of multiple trajectories of growth.
And Mike, you were commenting, I think a few minutes ago, 100 new Flymates in 2021. What are the profiles that you're going to need to keep growing, and where?
Yeah, our plan in 20 after we fundraised was probably to add that same number, right? Obviously, we had to look at the changing world and what changed in our business and where we were going to pull back an investment and expand. And navigate the initial wave of the crisis, right? And I think, there are companies now that, if you've successfully navigated that, that first wave, it is by far not over. But you kind of have a feeling of potentially some improvement, right? I know a lot of CEOs are looking at 21 and saying, hopefully it's not worse than 20. It's likely to be better than 20 because, we're likely to get better at dealing with this as a world, even though there's likely some really difficult times still ahead. And so as you look at that, we're fortunate to be in the position where we can continue to invest. The types of people we look for, they have to be willing to, understand that global environment and that global company. Global collaboration is a core company value of ours. Oftentimes they are people who highly value execution. I would say strategy for us is always, a component. But the vast majority of, I think, what differentiates Flywire is we execute, and we execute very, very well, right? We talk about strategy and where we want to be in 5 or 10 years, but then we put our heads down and we go execute, right? And so people who understand that are willing to, be players and coaches potentially when you think of executing. As I mentioned myself, I still do day-to-day execution in a lot of different areas around the business. And I think that's what keeps it exciting. That's what keeps people attached to the business. As a leader, I think it's really important that, your team sees you willing to jump out of the airplane first, as opposed to just, telling them to jump out of the airplane.
Well, let me jump on that one, Mike.
Sure.
What's your biggest challenge as a CEO? Past, present, or future? What is the most difficult task you believe you're facing?
I would say past, it is probably this notion of, I mentioned it a little bit earlier, but in the past, I had this belief that if I just performed right, I could stop everything from breaking. And there's no way you can do it in a high growth company, right? It's going to break, right? And so when you free yourself from the stress of having to worry about doing everything perfectly and just, adapting more quickly, it's an extremely freeing concept as someone running a business. I would say present, I don't actually spend a lot of time worrying about competition or I actually love competition. I'm driven by it. I worry right now about, are we organizing the organization in a way to be most effective, right? Are we, finding the right Flymates to take the business to the next level? Are we identifying the right people in the organization that can do more? And are we promoting them, right? I spend more time worrying about that because I think it has an immediate impact on our ability to execute. If I look forward, I often joke, I'm officially running a company that's bigger than any startup I've been a part of, right? Minus the acquired companies that then acquired prior companies. So, it's a constant learning. It's a constant, I'm not trained for the next part of the journey yet. And so how do I expose myself to the investor group that helps me prepare, to the board members, to, the peer group that helps me prepare for that. And be ready to adapt. I think the worst thing you can do is kind of be stuck in a spot, no matter what your career is, right? That changing that understanding of what you like to do and what you're good at doing, and willing to try new things and do new things, I think is really important. And
I love that.
So
I love the not being stuck at that spot and move ahead. Let's talk a bit technology.
Sure.
Blockchain, tokenization of the economy. Those are something those are things that are all around and that you must be hearing all the time. What's your vision about those changes? And again, a little bit like the COVID question, is it going to stay, or how is it going to affect your business? What's your take on that?
Yeah, I think there's definitely a here to stay to it. I think it is what often is I think missed is how long it takes to get to a certain point, right? I think if you look back, we've been talking crypto for, 5-7 years, right? Crypto and blockchain at least, right? So when you look at that, oftentimes, you go back to the conferences we used to be at in person and people would say, this is coming, it's going to revolutionize the world overnight. The reality is, I think, you got to go back 20 years. Like I go back 20 years and I look at things like digital music, right? 25 years even, right? And you look at the evolution of that industry, it took 25 years, right? And that was, music, which existed, different form factor. But you go back and you look at things like Napster in the late 90s. I mean, that was a digitization of music well ahead of its time, ran into a whole bunch of regulatory challenges, the way it was trying to disrupt the market. But ultimately what came out the other end, 15, 20 years later was, the Spotify's, the Apple Music's, the Pandora's, right? This ability to get content and, all entertainment, frankly, was changed because of that. And so, I look at things like, digitization of currency and crypto and the potential it has for that, kind of that evolution as being almost a certainty. I think people get excited about that technology. And there's folks that try and kind of make those things happen overnight, right? I mean, one thing, there's a lot of inefficiency in how money moves around the world, and technology like that can improve it. But, if you look at Flywire, for instance, I mean, we move, north of $10 billion a year in payment volume. And we haven't had to address it with crypto or blockchain yet, right? There's a lot of inefficiency you can take out of the system just through tech that already exists. But at some point there is a tipping point, right? Where it has the right regulatory frameworks. It provides more scale, more efficiency, more automation, more checks and balances, and you implement those technologies. So, again, I think there may have been a slight detour around crypto and, in becoming a little more speculation in a stored value for certain individuals and currencies. Obviously there's a whole aspect to it of, less than legal activity that I think throws a little bit of, darkness over it that has to be evolved out of it. But when it comes to digitization, blockchain, sharing of information, movement of money across financial institutions, to me, it's a certainty. It's just a question of timing. And oftentimes we think these things can happen faster than they really will happen.
Yeah, as an investor, it's a great way to lose money, invest too soon on a prospective wave that will take 20 years, but you invest now. So I've done that already. Look, there's a bunch of questions that are around what do you believe an entrepreneur or more a student, what do you believe a student should learn during its undergrad or more specifically during the MBA to become an entrepreneur? Well, and I would add a little adjective to entrepreneur, a successful entrepreneur. What is it that you think they should learn?
Yeah, I would even, consider myself a reluctant entrepreneur, right? Kind of unintentional maybe even. But, I ended up in a undergrad program. I ended up pretty much getting my MBA, quote unquote, while working in startups, never taking the chance to go back and get it. Because I happened to be part of great growing startups that gave me awesome opportunities. And every time I went to consider it, some executive would talk me out of it and say, hey, you're in the middle of the best case study you may ever see. So, like just learn here, stay. And I'm fortunate they did that, right? I really don't think I'd be where I am today if I hadn't had that experience. But in my undergrad program, I went to Babson, which is a very entrepreneurial school, and was fortunate to have an undergrad program that had a lot of aspects of entrepreneurship. And the thing that I took away from Babson, and the thing that I think so many people go to pursue MBAs for, is it gives you a level of rounding of a business, right? And there's all these moving pieces. And I think if you think of traditionally how we look at careers, you kind of think of like, oh, I'm going to go become an accountant. I'm interested in finance. I'm interested in, engineering, marketing, communications. That's just one element of a business, right? And part of, I think, what really is challenging is looking at that business and saying, how do all these pieces come together? And how do they come together in a way to make this a successful business? And that I think is a bit of the art, is that you can't look at the case study from what the glaring issue was. You have to look at the case study from all the parts of the business, because that's what running a real business is like, right? You can't just stay in finance. You can't just stay in accounting. You can't just stay in tech, right? You have to look at how everything comes together. Because if you don't have all those pieces moving in the right direction or aligned, you really are going to struggle, I think, to come out the other end with a successful company.
Yeah, and sometimes there's this undervaluation of the soft skills, which is 50% of the well-rounded player. We have 4 minutes left, Mike. I have a quick question before I will just ask to conclude on a positive or a negative note, or your personal note. Can you explain the logic behind starting education, then healthcare, and then I understand kind of luxury tourism or high-end tourism, and what those verticals have in common?
Sure. So first, we started off in education. We always kind of had this view that these were large, non-digitized payments that were going over through this kind of international bank system, this wire system that existed for, frankly, a century, right? And one of those challenges associated to that was someone is parting ways with almost very emotional. It's a very emotional transaction, right? It also is a stressful transaction. I have 4 children. I can't imagine sending one halfway across the world and then having my payment be part of the reason they can't get into their dorm room or can't get into, the right classes that they want, right? And so you have this very emotional transaction. We had that experience through Eker's experience at MIT, and we sat there and we said, hey, what's broken here, right? And so not only the consumer's experience was broken, right? They weren't getting enough support, but also the back office was broken, within our clients, within the schools, right? They weren't experts in payments, and they shouldn't have had to be, right? And so we identified that we could fix the consumer's experience, right? Provide more transparency, more confirmation of payments, all that kind of stuff, more flexible ways to pay. And then we also realized that software could benefit the financial team at our client. And so we started building, that network to move the money, but also software related to helping the finance teams and helping the payer. And once we had done that, we realized, okay, educational institutions aren't alone, right? Medical hospitals ended up having patients coming in from all over overseas. There was also a huge growth in the amount of out-of-pocket medical care that people were having to pay for. And so there's a lack of infrastructure to do this in healthcare that we saw. Part of the reason we wanted to expand into other verticals is because we knew we could do more than just within the education vertical. At the same time, we didn't want to underinvest in any of our given verticals, right? And so we had to get to a scale point where we could actually continue to aggressively invest in education and continue to own that market and grow and expand and service customers, and then still, grow new vertical markets. So that was a huge tipping point, right? Because we frankly could have tried that earlier, and we would have had to hurt our education business to try and grow something else. So we had to get to a tipping point where we felt we had enough capital and we had enough to invest in different verticals. And so if you look at the transaction, we love transactions that are, or industries that are yet to be digitized. If you go if you go rent a villa somewhere outside your home country, it's oftentimes a poor transaction, right? You have to go and send a bank wire. You potentially send money out of your bank account and you don't know when it shows up.
Yep.
And so there's different stresses that exist, around these types of payments. And again, a lot of what credit card payments have done, and only about 10, 12% of Flywire's credit card payments, the rest is bank payments, right? So a lot of what credit cards have done have not been able to be applied to very large value transactions, because, they hit certain card limits and they raise certain alarms because, very few people put 60,000 euros, for instance, on a credit card, right? No. And so, you need other infrastructure. And so we started to see this gap that existed in industries, the fact that we owned our own payment network. And, we went into these markets to say, hey, can we solve it, using software? And that's what got us there. They're large markets as well from a TAM perspective, total addressable market. So, we knew we could really grow and build a multi-billion-dollar company here.
And average high tickets also, I assume, no?
Yep. And poorly served, I would say. Like I said, a lot of the credit card processors or the banks had kind of ignored it and just assumed the bank wire system was good enough. And the reality was the software wasn't there and the experience was pretty awful for people. So,
all right. Great, Mike. I just want to take 30 seconds to thank Miguel, Robert, and Federico from the IESE Entrepreneurship Club, and also two people that are Flymates that were very important in building that interview, Jorge Preciado y Daniel Solanilla. And I want to thank you, Mike, for your time, for your transparency, and I really enjoyed it. So I hope we can repeat that in the future. And I will let you the final word.
And thanks so much for having me, and really appreciate the conversation. Happy to answer questions via social as well as a follow-up. And hopefully we do this in person next time and we can actually get together in person.
Excellent. Let's do that. Thank you very much, Mike. Thank you all for attending. And remember that basically you will be, this interview will be available on LinkedIn, YouTube. Take good care and stay away from the COVID. Take care, Mike. Thank you very much.
Thanks, Mathieu.